Hello everyone and welcome to today's cryptocurrencies update, the first video for 2023. It is Wednesday, January 4th. And first good news is that we are now beta testing my crypto trading bot. I am able to link my Coinbase Pro account to our bot. It cannot trade yet. We just want to see if we can link stuff. Seems to work great. All you do is give our bot permission to trade for you. It cannot transfer anything. It is super easy. Your money is entirely safe. You will not give out any of your private wallet information, none of that stuff. So it looks great. We're almost there. Just wanted to share this information with you. And I think with that, you will have access to an algorithm that will just trade 24/7 for you. I think that is going to be fantastic. You don't have to do the work yourself anymore. All right. So with that, let's have a look at the charts because we have some nice developments. And remember, if the evidence changes, we change accordingly. We always have a, I would say, preconceived notion based on what we know. And if that notion gets challenged, we will simply change it. All right. So again, there are many ways for you to use my services to your advantage. Learn the Elliott Wave theory. Check out my how-to videos. They're still, of course, very relevant. Again, sign up for my crypto trading alert service, which eventually will also, as I just mentioned, allow access to our crypto trading bot, full-on algorithm trading for you. You do two things, nothing. You just simply connect your account to our server and off you go. I can teach you how to trade, and of course you can join my hedge fund as well, where you will see overperformance. We underpromise and overdeliver, but we will do overperformance. And anything else, just give me a holler and we'll get in touch. Still thinking we're in a cycle 4. Question is all of 4 soon complete, or will we just see a large bounce, a couple 100%, and then another decline or not? And where are the altcoins? All right, so the altcoins, the Cardanos, the Binances, the Avalanches, the Polygons, the Solanas, and all that stuff can, of course, be traded very nicely as well. So this was or is one of our preferred views on Cardano, and it could have completed wave C of 5 of 5 in a slight overthrow. There are technically enough scribbles in place to consider this diagonal complete. We have not had even the first warning yet, which is a break back above 32.5 cents. Then needs to go above 44 cents, 60 cents, and ultimately 68.5 cents. So it's very, very, very early days. Now, if you would like to go long, then you know where to place your stop at the recent low and trade small, all those things. Don't throw everything in the kitchen sink, just add it, because we, of course, are still in a very big downtrend. If we simply look at the trend is your friend chart, which I will pull up here, you see we're, of course, in a very strong downtrend. There's nothing bullish about this one at all. We're just tracking the waves. So alternatively, and I've been trying to match Fibonacci's a little bit better with the current decline since the June high, is that we have only completed wave 3 of 5 here in red. We bottomed right here at the 123.6% extension of wave 1 measured from wave 2. That's quite typical for a diagonal. So just to show you then that we would then have a bounce back to about 38 to 46 cents. Nothing to sniff at. That again is almost a double right here, right now. We'll go back above the first warning level, and the second warning level might be challenged. Okay, 123.6% extension is quite normal, and we had quite a subdividing ABC third wave. Honestly, this Elliott wave count grows nicely on me. It also means there's potential for a very good, decent run all the way back to about 40 cents. From current levels, that's almost a double. So again, nothing to sniff at. And then we get our final plunge to about 15 cents. That would be the 161.8% extension, maybe 20 cents. So anywhere between 20 and 50 cents. That in turn would fit a little bit better with the bigger picture monthly chart of Cardano. We constantly had here a target zone between 5 cents and 15 cents. What did I show you here with this updated ending diagonal wave count is anywhere between 20 and 50 cents. Besides, we don't have any positive divergence yet on the monthly chart to help kick in the new bull run. Super cycle 1 completed in 21, and then we should have completed at a minimum wave A of super cycle 2 and bounce back all the way to the $1.50 plus, or we start a whole new bull run going to $5, $6, maybe even $10. To be determined, but it shows you there is tremendous upside potential. And also on the monthly chart, it looks better from a wedge perspective to have a 1, a 2, a 3, a 4, and a 5, as I showed you here. That would set up nice positive divergence, as we saw here in 2019, 2020. Okay, we don't have it yet. It's not a requirement, but 9 out of 10 times that is what we want to see. It means lower prices with higher readings in the technical indicators. We're extremely oversold on the money flow. So yes, a oversold bounce is very, very likely. I like this candidate in the sense that even for a bounce, there's massive upside potential. I think so. 100% gain is nothing to sniff at, in my humble opinion. And then long term, if we can bottom, so somewhere around 10 cents plus or minus 5 cents would be fantastic. What a opportunity awaits us. Everybody else is hiding under bed and will not enter until we're probably at $4 or $5 and completely missed the boat. That said, this is Avalanche. Avalanche starts to be also more sloppy overlapping since November, as you can see. So I still like the 1, 2, 3, 4, 5. Again, could be off by 1 degree. This is the problem with diagonals. They can easily tag on another ABC wave, just as we saw here for Cardano. It's an ABC and then another ABC. Okay, so what you originally think is all of the ABC is then 1 degree higher ABC. That's an unfortunate problem. Again, for Cardano, I like this perspective, so that's going to be our primary focus. Avalanche, back to Avalanche here, still looks diagonally. I'm still missing a 4 and a 5th wave. However, they're going to fill themselves in. I'm still missing it, but this still looks very good for a diagonal that eventually will very fast and swift reverse itself. And again, the ideal downside target for Avalanche was somewhere in the single digits, and we haven't reached it yet. And we haven't even broken the first warning level, which is $14.50. So also here, some good signs, but also here I expect lower prices, and this should be a bounce. Now, Binance Coin has finally rallied after having gone sideways for pretty much a month with around 240. But please remember, it is still below the Ichimoku cloud, below the 50-day and 200-day. So this is still to be considered a bear market rally until proven otherwise. It is only back above the 10-day and the 20-day moving average. So also here, very, very early days. So what does this then give us? Well, considering that Binance Coin has mostly gone sideways, we are stuck, unfortunately, with 2 options. The first one is a continued bear market lower, and we're now in wave 2 of 3, and we're going to see a 3, a 4, and a 5 all the way lower. This is a potential on the charts, okay? Because of the sideways nature, we're at 257 currently, which is the same as in September, which is the same as in July, which is the same in June. Such sideways mess is always hard to interpret correctly. We need to see a trend. This is not a trend. This is doing 2 things, Jack, and you know what. So we can easily rally here to between 270 and about 300 for a wave 2. And if we then plunge below the December low, 3, 4, and 5 going to be next. So the bulls must hold this 220 level. The alternative is that we've started a new bull run. So anybody who desires to go long, you know where to put your stop. And please remember that we are still in a downtrend and not even close to an uptrend. We're not even above the 50 or the 200 or the cloud. Nothing there. So also here, very, very early days, if a new bull run has started, because then from the November high, we've done an A, a B, and a C wave lower. And we're now in the starting gates of a new wave 1 of 3. We need, of course, to break above these warning levels subsequently to tell us that we are indeed at 3, 4, and 5. I haven't even seen 5 waves up from the December low. Okay, so this can still be an A, a B, and a C. as I showed you here, an A, a B, and a C. It depends on what price information will become available over the next several days for the market to decide if it's going to do the lower or the higher. Okay, I have no confirmation on either yet. I'm just showing you these two potentials, and then from a trading perspective, you can decide what you want to do with it. Okay, again, I have no confirmation yet that we're in a new bull. We need to break above these levels to really tell me that is the case. And in the meantime, I want to see at a minimum 5 waves up, a 3-wave pullback, and then a breakout above the 5 waves up that we just mentioned. Okay, so very, very early days if wave 2 has completed. Again, if you would want to long this puppy, then you know where to place your stops and how to trade this size-wise, because we're still, of course, in a bearish trend. So if you're in a bearish trend, you definitely do not, in my humble opinion, want to throw everything at the kitchen sink at it, but nibble your feet in and make sure that if you're green, you raise your stops, all that stuff, okay? It's a bear market until proven otherwise. There are bold traders and old traders, but there are no bold old traders. Moving on, Bitcoin. Today's rally doesn't do me much. Can still be in this B wave, and we get the C wave for the 3, the 4, and the 5. It remains my preferred point of view. I really have not much else to present on Bitcoin because the low in November would be a very unorthodox 5th wave low. If it is, so be it, then we'll deal with it. But for now, I don't see it. This doesn't mean everything else is going to crater with it, but I still like the A, the B, the C, the A, the B, the C, etc. Okay, so that remains my preferred view. Ethereum, a little bit similar to Binance Coin at the moment, moved actually better into this wave 2 target zone in blue. And also here, similar to Binance Coin, if we break below the December lows for Ethereum here, then we'll have the 3, the 4, and the 5 better into the ideal wave 5 of CFC2 target zone. That's a mouthful, but that's where we are currently at. I really would like that. That would be such a fantastic low risk opportunity. But the market is the final arbiter. And if we do break above 1350, I think we need to really seriously consider that we are already in wave 3 of 1 of 5. Okay, then we bottomed here for wave 2 in November. So also here, if you desire to go long Ethereum, know where to place your stops. Know how to trade it, because also Ethereum is, of course, still in a long-term downtrend, but we're breaking above the 50-day. As I mentioned yesterday, at the minimum, I want to see it break above the 50-day. Why? Because that then allows us to target 1350. That then allows us to target a 200-day, etc. Baby steps. We're not getting close, but every subsequent takeout of resistance, and as you can see, the 50-day has been stiff resistance, is a good sign. But it's still very, very early days. And so far, we've only done an A, a B, and a C up of the December lows. So similar to Binance Coin, we have to wait and see what information becomes available for the market to decide which of these two paths it wants to take. So I'm still a bit on the fence on these, but we did get above the 50-day moving average. So kudos where kudos is deserved. But now we need to break above 1350. If we can do that, we can challenge the November highs at around 1700. And once we start doing that, I think we have a very nice setup for a 1, 2, 3, 4, 5 waves higher for this larger wave 1 of primary 5. And then we have already completed a leading diagonal 2. How would that match with Bitcoin? Then Bitcoin will have a unorthodox low as well in November, and we'll have to reassess how this is going to work. But Bitcoin needs to close above the 50-day, target 18,500, etc. So long ways to go, long ways to go. Solana, on the other hand, starts to look pretty good. This one has technically done enough to consider an impulse lower complete since the August highs. But we must move above the warning levels 14 or 15.5, about 19.5, etc. Those remain on the chart. We haven't gotten above it. Starts to look impulsive. And then we bottom at $8, which is starting to get pretty close to 1.2 to 5.6 target zone. So again, right, the downside risk versus the upside potential is, of course, more and more skewed towards upside potential the lower we go. And as I mentioned before, these cryptocurrencies have had every chance and every opportunity in the world to instantly crash to zero in November, and none of them did. We could have easily had a Luna type of event based on the whole FTX Alameda debacle, and it didn't happen, especially not for Bitcoin and Ethereum. So long term, that is a very bullish signal. We had every opportunity to go to zero. We didn't. Well, then we know long term we should be good, and the long term wave counts are still operable. So Solana, I would say, has the biggest potential for having completed a larger bottom, but please remember, we're still below many moving averages in the cloud. There's not a bullish uptrend that has established itself at all, like we saw here in early 2021. So it's still very, very early days. You want to enter like we did here in early 2021. This is still too much high risk. You can still subdivide lower if Solana really wants to. We need to start making higher highs. Don't see it yet, but I must really say that this looks as constructive as I've seen it for a long, long time. So that's great. All right, so with that, I hope that covers it all. If you have any questions, please contact me. Take care, trade safe, and see you all on Friday.